All right, how is everyone today? Thank you very much for having us. I'm Jason Klein, and Matt Turck is to my right, and Ben Siscovick is to my second right. We'll formally introduce the full panel in a few minutes. But let me just start by talking about the general topic that we're going to cover today, which is investing in kind of the street fight universe, if you will. And we titled the panel, well, it's not even up there, but the billion-dollar opportunities in hyperlocal, and I'll speak to that specifically in a second. The street fight universe, what is the street fight investment universe? Is kind of an interesting thought, because as we were preparing for the panel, we asked ourselves what venture funds, really have a track record of focusing on the hyperlocal space, the geo-marketing space, location-based services, and we realized there actually aren't any funds that specialize in that arena. It covers a number of different camps, but it really is not actually a very defined investment universe. So I thought I would take a minute and just kind of define it for you. I actually wrote a piece for Street Fight a couple of months ago that laid this out, but the way I take a look at it, I put it into three camps. Of course, the overriding thread is location-based. And when I think about the universe, I divide it into consumer-to-consumer businesses, business-to-consumer businesses, and then B2B businesses, in each of which have a kind of a different flavor. On the C2C side, consumer to consumer, you have all those geo-social platforms, I call them, the biggest of which is probably Foursquare, which essentially uses location to connect consumers to one another, probably one of the bigger successes in this field. In the B2C camp, you have all of the businesses that are trying to market to consumers and to help consumers navigate from their homes to stores. And so this is often called geo-marketing, where you take a look at the vast budgets that marketers have, you interject location as a basis to target that sales and marketing effort, and you do it on a digital platform. And there you have a lot of companies like OpenTable and Yelp, and others that I put in the B2C camp, the geo-marketing camp. And the third area of this is really essentially the B2B, which is I look at as infrastructure. All the data underpinnings of geo-location, and all the companies that provide the data platforms. PlaceIQ, we have a number of the companies in that group were here and spoke today. PlaceIQ, Yext, ReachLocal, and so forth, are either data infrastructure or basically helping businesses market to other businesses using location-based services. So from a investment standpoint, though, you say from a VC standpoint, it kind of covers consumer and business investing. Some say VC is an industry of kind of fads, and at some level, consumer is sort of out at the moment in the venture arena, and B2B is kind of in at the moment, and we can talk a little bit more about that. The title of the panel, Investing in the Next Billion-Dollar Opportunity, the reason why we picked that is because larger venture capitalists, or later stage venture funds, tend to look for billion-dollar exits. If you're an early stage or a Series A or a Series Seed or B investor, you can make money by selling a company at 20 million, 50 million, 100 million, or 200 million. But if you're investing the big bucks that Silicon Valley in particular likes to invest, to get a suitable return for your investors, you need to sell a company for $1 billion. And that doesn't happen that often. And I think this year, I call the street fight space, we'll have $2 billion value creation events that are happening. The biggest one being Waze, which was a surprise, and we'll talk about it later, that Google bought for just under $1 billion. And then you have Foursquare, which is on track to IPO. It's unclear what the valuation will be, but it's talked about as perhaps 700 million was one of the numbers I had seen in the press. Certainly could be more. So with the rounding error, I'd say you have $2 billion opportunities that got created in this universe in this year, which is actually pretty big and may end up leading to other venture capitalists and more money coming into this space. So anyway, with that as kind of an overview, let me turn to our panelists and just ask them to introduce themselves and so tell a little bit about their background. Yeah, go ahead, Matt.
Hello. Hello. I'm Matt Turck. I am with First Mark Capital. First Mark Capital is a New York-based venture fund. We are currently investing out of a $225 million fund. We do primarily Series A. We do the occasional seed. We don't do that much B, so in your taxonomy, I guess we're more on the early stage side, although we do like billion-dollar exits as well, if we can find them. We invest across a broad range of opportunities with different investment theses at different points in time. But when you look back a few years, we cover lots of different things, and we'll get into this. But personally, I'm more of a data-focused investor, and I'm also these days very interested in anything at the intersection between the physical and the digital world, which sort of impacts or affects some of my personal interest in the local space.
Great, thanks, Matt. And Ben?
Hi, I'm Ben Siscovick. I was with a firm called IA Ventures up until about 4 weeks ago, where I was a partner when I left to go back to the operating side of the business. Over those 5 years, our focus was on investing also in the data space, particularly around this theme of big data, companies that were extrapolating insight and value from complex data. And within that theme, there are lots of companies that are leveraging geodata or location data to enhance some sort of product experience. So sat on the board of a bunch of companies that are quite relevant to the street fight theme and community.
Great, thanks, Ben. And just a little bit about myself. I'm Jason Klein. I'm the founder of an investing and advising company called On Grid Ventures, which is particularly focused on location-based services. I'm also a managing director at a small consulting firm called Empirical Media that works with large media companies on their digital conversion. And just in past life, most of my career has actually been in the media business. I'm a former CEO of a company that used to be called Times Mirror Magazines, with titles like Golf Magazine, Popular Science, and Field and Stream, and then spent a number of years running a group called the Newspaper National Network, which many of you might know as the NNN, which is kind of an aggregation group for local newspapers to national advertisers in print and online. And so let me kick it off today by asking each of you to talk a little bit about your perspective on this whole investment universe that we're talking about. What do you see as some of the most attractive opportunities, and where do you look for, where do you think companies should look for investments? Sure, go ahead, Matt.
So in the 3 buckets that you outlined in the presentation, I would fall very much in the third one. By background and interest, I'm more of a B2B guy. So I'm more interested in sort of the enterprise and data plays. But specifically for local, I think if you look at the history of the various successful investments and exits that have been made, it looks like a lot has been done at sort of the demand aggregation side, the search side, the findability side, and extracting all that information and basically providing it to advertisers so that they can make money. So if you think of Yelp and all OpenTable, all those sort of fall in that bucket. I think there's a host of opportunities on the supply side that haven't been quite as explored, and so there's various themes within that. So one theme, I think, is the fact that software is now so easy to build and customize that, and cheap to build, that you can provide software specifically for SMBs at very low cost. And I'm interested in general in sort of the automation of the SMB space. And there's a number of different things that only large companies could do, and software that only large companies could afford. And now this is trickling down to the SMB. So if you're a small business and if you want to sort of interact with your local demand, whether that's CRM or booking or any of those things, you are now able to do it. Or I think there's opportunities to create a lot of software that will enable you to do that much, much better. Another theme that I really like is the convergence of the sort of the physical and the digital. So it's a fairly wide category, but one of the interesting developments I saw lately is Apple releasing iBeacon. I don't know if that was discussed earlier in the conversation today, but there's this concept that using Bluetooth Low Energy, which is now by default in everybody's iPhone as long as you have iOS 7. So using that technology, Apple enables fundamentally any kind of retail stores to deploy small bits of hardware that can take any kind of like form factor, so small beacon that can basically broadcast data. And so the bottom line is that it's going to enable a level of sort of in-store, real-time interaction and personalization of offers that many people have tried in the past, and that now becomes possible. So that's a second theme, I guess, conversions of hardware and software in local. And I guess a related, maybe last theme would be the concept of Google Analytics for the real world. And this company is, I'm sure earlier in the day, people must have talked about Euclid. But this entire theme of being able to sort of track people, which is related to the iBeacon thing, but Euclid uses Wi-Fi signal and the interaction between a phone and Wi-Fi to be able to figure out who's in your store, what are they doing, and provide insights to the retailer. So 3 themes within enterprise.
Great, thanks. Ben?
Yeah, when I think of location, I think of it as a vector along which you can customize or personalize an experience. So I think of advertising personalization, I think of content personalization, and I think of experience personalization, all of which are dramatically improved and impacted by understanding the context or the location in which somebody exists. In advertising, I know PlaceIQ came and the CEO of PlaceIQ, Duncan McCall, was here earlier today, and that was a company I was on the board of for many years. What they do is they aggregate geosignal and extrapolate it from it insight around the context of the location. So if you're standing in a certain area, what is the context of that area? And by virtue of the fact that you're in that area, that says something about you. And that allows all sorts of experiences to be personalized to you. It allows content to be personalized to where you're located. For example, if you're in the Bronx on a summer evening, and you might be at Yankee Stadium watching a baseball game, and the content you are exposed to, or the advertisements that you are served, might be relevant to that sort of context. Experience personalization, I think, is a little bit different. I think of noting what Matt said about real-world and digital interaction. Uber, I think, is an interesting example of experience personalization, where by virtue of the fact that we are connected to the network, and the network can identify where we are located, we are able to therefore control and interact with a real-world experience, a real-world business experience, actually in a lot of ways, a transaction in ways that were never before possible, and that's enabled by the fact that we are now, it is now possible for us to identify our own location and the location of others that we are interacting with. In that particular example, it's ourselves and taxi cabs that we're able to identify their location of.
Thank you. Great. Let's come back and talk about the billion-dollar opportunity, and particularly talk about Waze and get your perspective on that. And just first, how many of you have heard of Waze and are familiar with it? So 60% of the audience is my quick count. How many of you think it was worth $1 billion for Google to buy Waze? If you think that was a good investment, that Google will earn a good return on investment on, raise your hand. Okay. And if you think Google kind of overpaid because they had their Google and they can overpay as much as they want, raise your hand. Okay. So people think Google overpaid for Waze. What do you all think? Why don't you, talk about why or why not Google spent $1 billion to buy a company very few people have heard of?
Well, more people have heard of it than we might think. I mean, actually, it's pretty popular these days. But beyond that, what was interesting about it, I think about it similar to how the logic that Facebook used when they bought Instagram. In some ways, it was probably quite defensive, but a necessary strategic part of Google that they wanted to make sure did not exist or not become an asset of one of their chief rivals, whether that's Facebook or Apple. Mapping is what it was all about. And people using the maps as a way of, or as a replacement, I should say, for the search engine, I think is the big threat there. Whereas on your desktop, you almost always do a search in the search engine and maybe you navigate to a map. On your mobile device, you oftentimes, and if you don't today, I imagine this is going to happen more and more in the future, you oftentimes will go directly to your mapping.
Yeah, but Google has Google Maps. It's pretty good.
That's right, but Apple Maps sucks, and
Right.
Facebook doesn't have any mapping application. So if they get something that can rival the quality of Google Maps, then Google actually is potentially strategically at risk. By paying $1 billion from that and effectively killing the best opportunity that one of those companies, other companies has to acquire it, they protect an extraordinarily valuable piece of turf.
So defense, it was good for defense. For offense, not necessarily, but it was.
I agree with you. I don't think Google needed it because of Google Maps.
Right.
Although there is something to be said about the network effect of having the individual's involvement.
And Matt?
Yeah, so...
Good investment or bad investment?
Good. So on the price itself, it's hard to, have any, thoughts. I mean, basically, I think it's one of those, Silicon Valley bidding wars. If you can get yourself in this position where you have the biggest company in the valley sort of bidding for you, then the price goes up and up and up. So, whether that was worth $1 billion or $500 million or whatever, hard to tell. I mean, it's great for everyone involved. I mean, the investors and the company. As to echo what Ben was saying, I think there is something fundamental about the business model and the product that makes it very hard to replicate and very hard to catch up, which is this concept of data network effect, which is that as everybody who's used Waze knows, you basically constantly contributing data to the network. So sometimes you do it actively by entering information in it, but most of the time you just contribute data passively just by having the app open and using the app. And when you aggregate all that data at the network effect, at the network level, then you end up having a product that is able to deliver insights in a way that's just, again, completely hard to replicate with any other approach, right? So if, they know that we all of us are on a road and you're like 2 miles ahead of me and you're going at a certain speed and I'm not moving, then there is a there's a traffic jam. But so the whole concept of data network effect is, you take data at the individual application level, you surface it to the cloud, you process it in a massive way, and then you're able to deliver to each single user a better product, which in turn incites more users to join the network and contribute more data, and so on and so forth. And that is, once that works, it's a beautiful thing, and is quasi impossible to replicate or attack.
And the only thing I'll add is that there are very few people very few companies that actually create and maintain an ongoing and vibrant map of the world, with all the streets and the towns, and maintain it on a regular basis. And I think there's only like 3 or 4 of them that actually exist. And Waze was one of those entities, because of crowdsourcing, they have a vibrant living map of not just the US, of the entire globe. And so that is one thing that sets it into a particularly different category. So Google is looking to some offense and some defense, which I think gets us to the next topic I want to talk about, which is just when you think about investing in this whole arena. And let me lay out the ends of the extremes. At one end of the extreme, this actually is a pretty vibrant area for startups. I mean, we just had a group of 7 or 8 companies, all of which sounded quite interesting, that have started up in the past few years and have quite interesting prospects. The whole SMB universe, I mean, how many companies are coming up with some kinds of services to sell to small businesses and help them get on the web? A social platform that consumers can use. It's easy to write something for your iPhone that picks up location and get someone else to download an app. And so that's relatively easy to do. So at some level, the barriers to entry are really pretty low in this arena. And so it really is a pretty vibrant arena for startups. You jump to the other side of the equation, and then you've got monsters, the biggest monster of which is Google, which has an enormous local strategy, is built thinking a lot deeply about maps, about Google Places, about Google Local. They bought Zagat to have an in the restaurant area. Certainly recognizes, Ben, as you had said, that mapping is an entry point to the web, just as search is an entry point to the web. And so you have Google, you have Yahoo, and you have Facebook, all of which are thinking a lot about location, have built that into their offerings, and are very much on the lookout to make acquisitions. And I think one of the speakers earlier today was Jamie Tedford, who had talked about the local graph is an enormous platform that these larger companies, people are going to can use location to basically enter how they think about buying goods or services or getting anything done. It's a whole different way of looking at things, and clearly Google and Yahoo are thinking about the world from that standpoint. So I guess I'm laying out 2 extremes. You've got massive companies and you've got startups. Is this a good place to start a company? Would you invest in an early stage company in this arena? What does it take to get a company to grow?
100%. I mean, we just brought up a company that was started outside of big boys and was bought for $1 billion. Right. Ways. Instagram, you look at, in a similar space, maybe not necessarily location specific, but they were a new entrant into the social networking space 10 years after, or maybe not 10 years, 8 years after Facebook got started, right? Sold for $1 billion. I think there's always those pockets of opportunity for lots of reasons. Most prominently, though, the common theme is both of those companies were mobile-first companies, okay? And so the mobile paradigm, which is different from the paradigm in which the big players that you describe emerged, creates all sorts of new opportunities for startups. I mean, we're seeing that every single day. Uber is going to be a $1 billion company, I think, because it is, again, it is a mobile-first company dominating a extremely important real-world interaction that we all have every day. So yeah, I think there's lots of opportunities.
Matt?
Yeah, in general, I mean, I don't think we're, you're in the business that we're in without having fundamental belief that, startups are, well equipped to win in any given market. And, we see it time and again. I mean, so the classic example actually in local was, Facebook Places trying to compete with Foursquare and then realizing that actually it's not that easy, right? So eventually the technology was built in other pieces and Facebook is doing quite well in local. There's something fundamental about being a startup and having a very, at least initially narrow mission and doing one thing and doing it extremely well that equips you to compete with a giant. So now, do you want to do something that is, focusing on something that's absolutely mission critical for Google and Facebook and all those guys? That may be a strategy, and you hope to be acquired, but you have a strong chance to get crushed as well. So it's and then, by the way, it's the one of the giants that I'm actually interested in see what they do is Twitter, right? Because I don't know that, but they bought Spindle a few months ago, and I don't know if there was any kind of announcement still.
You said Twitter?
Yeah, Twitter, yeah. And
they also just bought MoPub.
Yeah. This whole concept of being able to, do recommendation in real time, it seems to me like an obvious opportunity for Twitter, and I'm surprised it's not a more major priority.
Right.
So curious to see how that evolves as well.
How about hyperlocal content? That's a topic in this conference. Is this a good? You've got a lot of companies focusing on doing content startups. You've got Patch and the hundreds of millions of dollars that they've lost. You've got lots of mom and pops. Jeff Jarvis talked about that hyperlocal can be a business, but it's sort of a business that can maybe support, a husband and wife team and not much more. What do you think about hyperlocal content? Is that an opportunity, or do you want to just stay away as an investor?
I think it's hard. As you said, there's been like a bunch of companies trying to do that. Before Patch, there was Outside In and others. And it's hard for a number of reasons. It's hard to go beyond the sort of ghost town effect, where you're going to have some local sites which are going to have plenty of information. Others are just going to be empty, and that's going to be hard. Arguably, at least my personal sort of taste into things, the very local news are not always exactly gripping. I mean, sure, you might be interested in stuff that has to do with schools, but when you look at what's on all those sites, it's a mix of actually national news or citywide news, and the local stuff is not, that interesting. It's harder to get a network effect going, so you end up, working really, really hard. So it can be optimized, and that.
So stay away.
Then again, there's always, again, that's why we love startups. There's always, somebody who figures out a new, interesting way of doing things. I guess, like, the sort of the company that's doing well in that space, although arguably it's only partially content, but Nextdoor has managed to create some networking effects.
But I want to leave time to take questions, but just quick answer. Thumbs up or thumbs down on investing in hyperlocal content companies?
I agree with Matt. I think it's hard, which means that there's two VCs up here saying it's hard, which means you should probably go ahead and do it anyway.
Any questions from the audience? Please, go ahead.
Yeah, so you mentioned you're bullish on the SMB space. How do you think about Amazon as a competitor in that context? And how do you square the opportunity for SMBs in terms of their marketing when you got Amazon out there getting more local?
I was thinking of SMBs more at the sort of software infrastructure level. So it's a whole separate thing, but I think in general, I think pure e-commerce is getting really hard because of Amazon. I mean, it's a business that, as we all know, is fundamentally all about optimization because you have very low margins and scale matters immensely. And I think just doing pure e-commerce is hard. So doing stuff around e-commerce, so maybe same-day delivery, that type of things, where you provide capabilities to other e-commerce players that do not have those capabilities. I think there's a rationale for that. So again, when I was talking about SMBs, I'm more thinking about better payment solution, better booking solution, better tools that would enable a local business to have a lot more intelligence about what's going on around them and other local businesses that they could partner with, parts of town that they could target, because all that data is available, is not just sort of processed and aggregated in a way that provides sales intelligence to an SMB. So that's that type of opportunity.
Other questions? Go ahead.
So I've got 2 questions. You just saw 6 startups. Which one would you take a meeting with? And secondly,
That's probably not a fair question because we were all prepared. You didn't
Oh,
get
you
a
were all
chance to
back
really
there?
watch
Okay.
the depth of that panel.
then-
Unless someone wants to jump in and volunteer something on that.
Yeah, that startup Waze that was here, I'll do that.
Yeah, okay.
so you guys didn't see it. All right, I'll move on to my second question. One of the big issues with SMBs is a naturally high churn rate, for sales, and also a high customer acquisition cost. Have you seen companies that have done particularly well in acquiring companies effectively and or keeping the churn low?
Can you actually repeat that? I didn't quite follow. You saying for SMBs?
So for
Local
right,
SMBs
right.
or SMBs in general?
No, for companies selling to SMBs, a lot of folks
Selling
here
to SMBs.
selling to SMBs, your customer base churns hard, and customer acquisition tends to be very expensive. Have you seen companies have done particularly well in addressing those issues?
I haven't seen companies get around those 2 issues. Addressing them, yeah, I've seen them actually scale large sales forces that cost a lot, and the cost of acquisition is high, and they've done that successfully. But you need I have not seen companies productize that in a way that simplifies it where they don't need the large sales force. Maybe, I could look at Google and AdWords and say that they've done probably the best job of creating a platform that an SMB can access and with relative ease figure out how to use. But in general, you look at like Yodel or Reach Local, these companies are quite large, targeted people. I would guess 80 to 90% of their staff are salespeople.
I guess at a local SMB level, that's very true. I think you scale with more salespeople, which is really hard. If you can go one layer up and sort of catch those people online, then yeah, we have a company at First Mark called Shopify, which is e-commerce stores for SMBs, and those guys are growing. They went from 40,000 customers to 80,000 just this year. So I think there is a way. I guess we're out of time, but there is a way it can be done, and it's with a lot of optimization and again a network effect around the brand becoming better known, which attracts more people and so on and so forth.
Great. Well, thank you very much. We're out of time, but thank you very much, everyone.